Welcome to Markets Now. I'm Michelle Ruck along with Dwayne Bussey with Bolt Marketing, and we're mostly higher in grains except old crop corn. Over in the livestock, we're mostly lower except for some of the deferred live cattle contracts. And Dwayne, I want to bring you in to talk about soybeans. First of all, we've had this big sell-off the last couple of days. Actually, third day in a row now we've been higher. How much of that is just resetting here after the big sell-off, and especially as we're getting into end of the quarter and into reports coming up?
I like that term resetting because I think that's what the general markets have done over the last month. And soybeans were about the last ones to hit the reset button. And what I mean by the reset button is the funds got out of long positions.
Right.
Last week, boy, towards the end of the week, we were down hard every single day on very little news in the soybean market. And I think that was just funds getting out of long positions, hitting the quote unquote reset button. And now as we go into this week, it looks like the fund liquidation is done. The longs are out that want to be out. So now if there's a few people that want to be long the market at 14 bucks, they were able to step in and buy this thing. We're climbing back and looking pretty good. I think people start to remember and realize that old crop stocks are very tight for soybeans. Yes, Brazil's got a monster crop coming in, and we'll have to adjust to that maybe down the road here for new crop exports. But we can't increase our old crop stocks. So I think we're creeping back up on that news as well.
And that reset is also taking place in the meal market. Funds are probably still long there, but certainly not as long as they were.
No, exactly. Yeah, not nearly as long as they were. $500, big surprise, ended up being a big psychological resistance number. And I think we need to remember, even though Argentina's crop size is reduced substantially, that doesn't mean they're not going to export less meal, honestly. They just import the soybeans from Brazil, grind them. So they keep crushing soybeans. So that meal market, we maybe overdid it when we got close to 500.
Yeah. And I'd ask you how much we'll retrace in the soybeans, but a lot of it really depends on what we see for acreage out of the report here coming up on Friday, and quarterly stocks perhaps. All right, so let's move over to the corn market. We have had some unwinding of these old crop, new crop spreads, the bull spreads. We've been unwinding those the last couple of days, even though we've had some more export business, China coming in here again this morning. So what's going on in the market?
Almost feels like the corn market's positions itself at the 650 mark for the old crop. That's where they want to be going into this big report on Friday. Okay. Now, I hate to say that come Tuesday morning because that means it's going to be a long, boring trade in the corn market this week. But they hit that reset button earlier than soybeans. Funds got out of long positions, even went short. But then we've rallied since on the ideas, the old crop export demand. But I think you had mentioned that's pretty much priced into this market at this point in time, unless we continue to see USDA sales flash announcements in the morning. So I think the market's kind of just where it wants to be and waiting for this big report on Friday.
Okay, and the wheat market maybe helping out a little bit, providing a little spillover for the corn, but the wheat market, is that short covering, Dwayne? Because we know the funds are short in all three wheat classes, but especially Chicago wheat. Or is there something more? Is it the crop conditions? Is it putting a little war premium in?
I think it's a little bit of all of them, but you're right to start with it's short covering because the funds are still massively short this wheat market. But last week Russia talking about an export ban rallied the market sharply, right? So that was also short covering funds getting out of short positions. And then no, we're not going to have an export ban, they said. Then over the weekend, but we sure don't like these prices lower, and we're not going to give it up for nothing below farmers' cost of production, they said. And to the point you and I were talking before we started the broadcast, that is an export ban. And if you're not going to sell it at lower prices, you're basically drawing a line in the sand. So I think if you're a fund and you're short the wheat market, I don't think you're crazy excited about your short position anymore. So this is a big short covering rally. But you mentioned the winter wheat conditions. It's the poor to very poor being so high that really should be alarming. And obviously we'll see how it comes out of dormancy here a little bit, see if we get some more moisture. They're forecasting more moisture, so it should get better. But that, 50% poor to very poor, that's in really tough shape in Kansas. So there's probably some irreversible damage there, and that should justify a little bit of bounce in all three complexes.
Yeah. Well, as we've mentioned ad nauseum here already, that we're positioning going into these reports. Average trade guesses out on acreage for both corn and soybeans are actually above last year. What do you think we're going to see?
Well, when it comes to planting intentions, that's probably correct. I'm sitting up here in Northeast South Dakota, and my planting intentions are to increase corn acres this year, quite substantially over last year. We had some prevent plant last year. We had 6.4 million in the total U.S. Now, right now, looking outside, I can tell you what I am intended to do and what's going to actually happen is already getting too late for that, believe it or not, because of the massive snowpack and the extended forecast of continued cold temps. I don't see me getting out in the field and all this stuff. We have that much snow up here that we're going to have some prevent plant. Whether it'll be average, above average, below average, we'll have to see in about another month or two here.
Okay. Let's move over to the cattle market. We've had a couple of good days here of recovery. We had a higher weekly close in cattle last week. So today, are we just seeing a little profit taking, kind of waiting for maybe the cash market to give us some direction?
Yeah, I think so. But boy, after yesterday's sharp rally and the comeback on Friday's close, I'll take a day like this anytime if you're a bull. This is really good. You're right. We're waiting for that next bullish move. Hopefully it's higher cash cattle trade this week. I know some are calling for lower cash this week, but boy, the way we ended last week, I think the last few sales were higher to a couple dollars higher. So I think we can actually trade cash cattle a little bit higher this week, maybe surprise the market. Higher cutouts would sure help too in the meantime. But if the outside markets calm down a little bit, I think we can have obviously a higher to sharply higher cattle market in the months to come.
Yeah, and I'm hearing that a lot of people think we're going to have higher cash. We had bids by packers already yesterday, which is very unusual. Certainly shows that maybe they need some cattle. What about the hog market? A couple, 3 days up, and then today we're back down. So are we just consolidating here again, or are the futures too far ahead of the index, which is starting to drop again?
Maybe just a little bit of pause in the recovery, but I think we're on to a recovery in this market. We all talked about the increase in production during the first quarter of this year, but actually when you look into the second quarter, production should drop quite a bit in hogs. Remember, the hog and pig reports were bullish the last year and a half, really. Now another quarterly hog and pig report this Thursday looks like it'll finally show about 100%, so about the same. So we'll finally stop reducing this herd size. I don't look for that to be a big market mover, but I feel like this market really tumbled. We also hit the reset button there. Funds got out of long positions and went short the hog market a little bit. I think we can start recovering from here. I really think we can start grinding higher, but it's the hog market. You're going to have days where you're down $1 or $2 and then up $3 the next day. That's fairly typical for that market.
Yeah. A lot of hog guys tell me, though, that they think the numbers are exceeding the USDA hogs and pigs reports from the past couple of quarters here. Do you think there's a possibility of a surprise maybe showing those numbers actually being confirmed there or not?
I don't know. That's a good question. And they're right as far as, look what we've had lately. Slaughter just continues to stay high. We're not seeing any reduction. Cutouts keep going lower. So the futures market had to go and crash lower. So those guys that are mentioned that are absolutely right in the short term. USDA is the one calling for a little bit of a reduction, actually a pretty sharp reduction in the second quarter. So we're going to see who's right in the end here. Being this far north, I'm not a big time in tune in the hog market, but I keep hearing, but I hear this every year, that there's hog barns that are empty in Iowa. So we'll see. We might get some confirmation on this hog and pig report this time.
Well, it's hard to argue with slaughter numbers, though. So we'll see. All right. Thanks for joining us, Dwayne Bussey with Bull Marketing, and that's Markets Now.